Hello, Namaste. I am your host from Prophetic Education and welcome to Prophetic Education. And today we are going to discuss a topic that's been on everyone's mind lately, the rise in tax inflation in India. In this video, we'll break down the circumstances and situations that have led us here, compare our tax system with other countries, and explore its impact on the common man. And we will also discuss the pros and cons of the current system and possible alternatives that the government can consider to provide relief to the people. As rise in tax inflation in India is a growing concern. So let's start with the basics. As we know that India, a country with population of over 1.3 billion people in the fifth largest economy in the world, so however, with rapid economic growth comes the burden of inflation. And one of the major contributors to this inflation is the rise in tax rates. According to the report by the Reserve Bank of India, the country's retail inflation rate has been constantly above the 4% mark, which is the upper limit set by the government. So, RBI report retail inflation rate 2018 to 2023. But what is causing this rise in tax inflation? To understand this, let's take a step back and look at the current tax structure in India. The Indian government generates its revenue primarily through indirect taxes such as the goods and services tax, GST, and direct taxes such as the income tax, IT, and the corporate tax, CT.
Indian tax structure a breakdown. Now, let's compare our tax system with other countries. In countries like Singapore and the United Arab Emirates, the GST rate is as low as 7% and 5% respectively. It contrasts, the GST rate in India is a flat 18% for most goods and services. Similarly, in countries like United States and the United Kingdom, the corporate tax rate is around 21% and 19% respectively. In India, it's whopping 25.17% for domestic companies. Corporate tax rates, India versus other countries. But what's the impact of the high tax rate on the common man? The answer is simple, it's inflation. When the government increased taxes, business pass on the burden to consumer in form of higher prices. This reduced the purchasing power of the people, especially the middle and the lower classes, who are already struggling to make ends meet. For example, let's say you are a daily wage earner who earns rupees 500 per day. Now you spend rupees 200 on food, rupees 100 on rent, rupees 50 on other expenses. That leaves you with just rupees 150 for saving and other expenses. But what if the government increases the GST rate on food from 5% to 12%? Your food bill just went up by rupees 20. That's 10% increase in just 1 month. Impact of tax hike on common man. But it's not all doom and gloom. There are some countries that have implemented innovative tax systems that have actually helped to boost their economy. For example, in Estonia, a small country in Eastern Europe, the corporate tax rate is a flat 20%. However, the government also provides a 100% tax rebate or RD expenses, which has made it a hub for startup and tech companies. Estonia, a tax haven for startup. So, what can the Indian government learn from these examples? Firstly, it can consider reducing the GST rate to bring it in line with other countries. Secondly, it can provide more tax incentives for businesses that invest in RD and create jobs. And thirdly, it can simplify the tax structure to make it easier for small businesses and individuals to comply. Way forward, simplifying tax structure. In conclusion, the rise in tax inflation in India is a complex issue that requires a multifaceted approach. While the government needs to generate revenue to fund its development programs, it also needs to ensure that the tax burden is not passed onto the common man. By learning from the other countries and implementing a more progressive and simple tax system, we can create a win-win situation for everyone. Thank you for watching this video on the rise in tax inflation in India. If you like this video, please give thumbs up and share it with your friend and family.